The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 12th, terrific Thursday edition of today's Trader's Edge show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, you can reach us at 727-445-1044. You can send me an email, steve@tfnn.com. And as long as the ISP gets it to me before the show, we'll take a look at whatever it is you would like to look at. And inside the den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 112 points at 19,841. S&P off 11, trading at 2263. You've got the NDX down 26 points. NASDAQ Composite off 34. Russell is down 17 points. That is the leader percentage-wise to the downside, 1.3% to the downside. Though the SOX index, I take that back, that's down 1.4%. That's off about 13 points, trading out 1913. Gold is up $2 right now at 11.98. Silver is flat. It's off really 4 pennies. Light sweet crude is up 80 cents, trading at 53.86. Leading the charge here to the upside, up 31%. Straight Path Communications, STRIP, STRP is the ticker symbol. Amazon is up 8. Applied Opto Electronics is up 7. That's 30%. Not sure what's going on there. Advisory Board up 15% or $5. Polaris Industries up 5. Eagle Pharmaceuticals up 4. To the downside, Intuitive Surgical, $14, a little over 2%. Vista Outdoor Inc. down 24% or $9. Priceline is off $6. That's less than 0.5%. So we've got individual stocks that we can look at, but I want to look at what you want to look at. So the first request actually that came in fact, it's the only request that I see out here, is from Gator in the Tiger's Den. Gator would like to take a look at TBT. So let's do TBT. Now, TBT, in essence, would mean that you are short bonds. And is the question, are you looking to get in? Is that what you're looking at there, Gator? If we just look at the TBT chart, and you know we're not going to just do that because the underlying instrument, it's what you and I want to pay attention to. So we'll go take a look at, in essence, the 30-year bond. If you take a look at what's inside the TBT, actually, I believe it forces you back to see what's inside the TLT. What you'll see there are various different dated longer-term treasuries out there. So it's a basket. It's not like one thing facility or one ping facility. In this case here, though, if we're just going to make some type of decision with regard to TBT, Gator, what I would say is today, prices pulled back to its TAS weekly profile, bottom of the box. And that is priced out at $38.29. Now, the question is going to be, is that going to be enough to hold price? And I don't know the answer to that. We're going to take a look at what the yen is doing. I would say now is, well, let me give you the data and the information, and you decide what it is that you want to do. What we can say, if you were just making a decision based upon the TBT, we would say that if this closes below 38.29, then this has got further to run to the downside. Oh, you might say, oh, Steve, you're like a rocket scientist to be able to come up with that conclusion. Well, what I mean is you would then be below a significant level of support. Now, and then we'll take a look at this weekly box, the green horizontal lines on my chart. We can see the point of control, a little dash line closer to the top of the box. That says, hey, really sellers were in control of this area. Now we're going to see if sellers can actually bust them through a support level. And if it occurs, in your next logical area to look at this longer term, which is what Gator is thinking, you'd really be targeting the November 9th breakout. That's a wide-ranging bar. If you color in the gap, remember, gaps are our friends. Now, if you are bullish something, you want to see a gap to the upside. It is the exact same as a wide-ranging bar. What do we mean when we say gaps get filled? And look, this is something that we learned from the Obi-Wan Kenobi, right? He is the teacher of this. You buy something that comes back to the breakout. That's all it is. In the case of the gap, we don't know whether the breakout's going to be the bottom of the gap up. That would be in this case here, the November 9th session. That's at 36.34. Or it's going to be the top of or near the top of the November 8th session, which is 35.10. I think longer term, Gator, since that's what you're looking at, that in essence is what I would be looking at as possible entry points into the TBT. But you're going to want to get some type of signal from the yen. So let's go take a look at the yen. Now, what is it doing out here? The yen, and it's going to be most important since you're looking at this long-term, Gator, it's going to be most important for you to take a look at this at the end of business tomorrow, at the close. Why? Well, let me go ahead and, how'd that work out? Okay, let me go ahead and turn off bonds. We'll come back to them just simply to answer your question here with regard to levels you want to look at. But now we just have the Japanese. Yeah, we've got the Japanese yen on my chart. And what we can see here is there's a significant level of, just as TBTs hit a significant level of support, yen futures are hitting a significant level of resistance. Now, they are trading above the resistance zone, that price being 0.87559. Not by a lot, but by enough, and this is really going to be important, where does it close tomorrow? Because if this closes above that horizontal green line, it would be the same thing as saying the TBT closed below that level of support. What is the more influencing factor? I would say it is yen futures before making your decision out here. Now, if we go take a look at what are bonds doing, what are the 30-year bonds doing? They're back inside the box, so to speak. Not the jack in the box, but the TAS market profile box out here, which, by the way, has a, you can see it, it has a bias to the upside. So, Gator, what this is saying to me, as long as the 30-year Treasury is going to trade above the price level of 152.18 out here, 1830 seconds, then where we're taking a look at bonds running up to is the 156 area, the top of the box. That's really going to be confirmed by what the yen actually does out there. So I think, you're up against support. But you were saying you want to take a look at this from a long-term standpoint. And from a long-term standpoint, I would wait until tomorrow's close. And if you see the yen futures close above 0.87559, that is signaling to you and I a change in trend. And there's going to be more of a bounce in the 30-year Treasury. That means the TBT should fail at that support. Steve Rhodes with TFNN, that support level again being 38.20. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader.
As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we saw a nice move to the downside earlier this morning, albeit with basically vapor volume. And we'll go take a look at that. We'll go ahead and use the ETFs as one of our benchmarks for that. Right now, what we have up on the screen here are 10-minute charts for the S&P futures, ES on the left-hand side, NASDAQ futures on the right-hand side, the NQ. You're going to see inside the NQ, which I believe is the instrument that is also controlling the marketplace. In other words, until the NQ just simply fails in a big way, it's not going to drag the markets lower. It's going to keep the market sideways. Look, what we do know is over the course of the last 85 years that the day when the Dow tops, and so far this is the case out here, is January 6th. Right now, it's really right on target schmarget out there. And then we happen to also know, without equivocation out here, is that the last four Republican first-term presidential candidates who've taken office from a Democrat each see the Dow top on January 6th out there. So that pattern is in play. We will not neglect that. Now, with regard to what on a short-term basis is going on, you're going to see a couple of different trends. You're going to see one trend line really inside the ES mini. You're going to see two patterns right now that are worth paying attention to. Number one, we've got the TAS profiles. And you can see that this box out here is biased to the bullish side. So this says that price should head up to about 22.62. Maybe it's 22.61.75 to be exact. So far, their high, 22.61.50, I think it was it? Yeah, 20. That's really darn close out there. Close enough for me. So the question is going to be, who's got the more power here? Is it going to be this TAS market profile, or is it going to be just a short-term trend line that is drawn on this 10-minute chart? And I don't know. If we see it close above that trend line, then 2262 should be in the cards for you out here. Now, if we take a look at the NQ out here, the NQ is also got a trend line, little rising trend line. This is a nice little dark green line. And price is already stalled at the top of its box. Now, the center of that box is pretty much right dead center. So we don't, we can't make a decision. We can't make a conclusion. We can't draw a conclusion. We can make any conclusion we want. But in this case here, we cannot draw a conclusion. The only conclusion we can draw is price is up against resistance, the top of the box. And until it breaks through until it rejects that area, breaks through this little trend line, that probably, so this is a 10-minute chart, gives you your next feel for the move on a very intraday basis time frame. You get above this level, 50, 24, 25, and the question would be, well, where do you head to next? Now, that was a 10-minute chart out here. So let's come over here. Let's go ahead and put the NQ up, because I do believe it is the NQ that is, in essence, ruling the world. And we'll take a look at the NQ. We're going to look at the 30-minute time frame out here. Now, in a 30-minute time frame, you're going to see I have a similar little trend line out here, and its top of the box, interestingly enough, is in fact biased to the bullish side. But that objective has been achieved in the 50, 25-ish area. Closing above that would get you back to bullish, because or at least another move to the upside. How do you really do this? What I like to do is then go up to the next time frame. Now, on my little chart here that we're looking at, the next time frame happens to be a 60-minute time frame, which I believe, let me just hit the update bar, just make sure, has just formed a brand new profile. I mean, as during the last hour out here. So that would then say 50.36. So you got to take it step by step, intraday-wise, increment by increment, to help you identify where price is likely headed to. So this way it allows you to adjust stops, targets, the whole kit and caboodle. I think we've asked where the kit and caboodle came from, and for the life of me, I can't remember. But it is fun to say the whole kit and caboodle. All right. Question came in, Steve. AG, welcome back, AG. We haven't seen you in a while, or at least I haven't. So hopefully you had a nice holiday out there. And the question is, Steve, UUP, please, where is a good entry for a long term? So you are wanting to go long the U.S. dollar index. Is that correct? That is correct. So let's go take a look at, first let's try to answer that with regard to UUP. And I think what you want to do is sit on your hands for a while. Not like a day. And first I really should ask the question, what's the time frame that you're looking at on this? Is this what type of trade really are you looking at here? Because it's going to certainly change the question. So longer term. Okay. So here's what we know. If we just looked at UUP, which is the Power Shares DB US dollar index, and we'll go take a look at the US dollar to give us a better feel as to where it's headed to. Right now, today's is traded at 26.15 volume-wise, the downside 1.2 million shares so far, moving into a place where it broke out with 3 million and 3.6 million. I can tell you, just straight line math in my head, it doesn't have volume as it's pushing down. So that would be a good positive thing. Long term, though, to answer your question with regard to UUP, you look at 25.70. That's the bottom of its TAS weekly box out here. However, to really answer that question, what we really need to do is we really need to take a look at the U.S. dollar index. And this is one thing. Let me go see if I get my other chart. Where did we leave off yesterday? Let me bring up the U.S. dollar index on it, because what we know that occurred yesterday, Alex, is the U.S. dollar index. I'm trying to do two things at once here, which sometimes is doable. But what we know about the U.S. dollar index is yesterday it tested and rejected. So that move to the upside was nothing more than a test of resistance. Let me show you why. Now, today's candle session, may end up being a hammer candle, so it is worth noting. I think I have just a slight delay on this charting package. 101.19 is the other chart. Yeah, no, we don't have a delay out here. But watch where the body of this candle finishes. But here's what I wanted to say to you, suggest to you, have you take a look at. A few days ago, 2, 4, 6 days ago, you'll see this little blue numbered 13. That is a Tom DeMark sequential count. Now, in order for his basic system to, and it's just an indicator, But the indicator goes active, in this case here by calling a top, when you see a close below the trading session 4 bars earlier. Now, when this actually occurred out here, let's go see. On this trading day, looks like it was January 4th, 1, 2, 3, 4. Guess what? Not only did it give you a signal, it gave you the signal and a confirmation to sell, Mortimer, on that exact same day. Doesn't happen often, but it does. And price being below Stevie's red line, that oscillator unchanged line, that's another signal in this case out here. Yesterday, on that move higher, was nothing more than a head fake. A little Michael Jordan head fake, but you and I know it wasn't really a head fake because we knew where that oscillator unchanged line was at. And so this is giving us a signal that at least you've got A to B equals CD to the downside, at a minimum. Now, the reason I say at a minimum, because you're looking at your IRA out here, and that, by the way, takes you to 100.44 as level number 1. Level number 2, 99.75. Level number 3, 98.88. Now, what I'm about to share with you bodes well for gold. Now, not all this happens overnight necessarily, but what I can share with you, and you can go verify this and look up the data yourself. What really influences the direction of the U.S. dollar is more so going to be the euro. And I don't have the data on the euro. But if we were to take a look at the CFTC data for the U.S. dollar index, you're going to see that this group of traders called commercial traders, who usually get it right, they are moving in a quick way and have been moving in a quick way to short the U.S. dollar index. And when it comes to the yen futures, in an even bigger way that the yen is going higher. I think you got to sit on your hands here. Sit on your hands. As the U.S. dollar index is going down. Now, Steve Rhodes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I mentioned in the den earlier that the market has gobs of liquidity. Yep, that is a technical term. We'll just have to figure out what the what GOBS should stand for. But it has gobs of liquidity. Now, and therefore, the bounce that we're seeing, that could be the low for the day, quite frankly, that took place out here because of that gobs of liquidity that are out there. Now, when I'm using that as a reference point, the indice right now that actually is very strong is the New York Stock Exchange. Unfortunately, you and I can't trade it, but it's the strongest, one of the strongest indices out here. And the message that it really provides to you and I is the gobs of liquidity. Now, if we take one of the ways that we're taking a look at advanced decline data, let's just simply take a look at the advanced decline oscillator, very bottom panel of my screen out here. Let me scrunch it a little bit, another technical term. You can see right now the reading is 10.17. 10.17, that is above zero. If sellers are really in control of the market, where this finishes the end of the day is below zero. The lowest reading today was just slightly below zero. Now, the NASDAQ composite, believe it or not, for as strong as it is, that reading for its advanced decline oscillator, the difference between the 19 and 39-day exponential moving average of that data out here is actually below zero. And the Dow has been below zero for God knows how long. Actually, God does know how long, and you and I know how long, which really began December 28th. So since December 28th, we've been below zero. Lots of sideways-ish type trading out here. And there is no real sellers. That's the thing. How can we make that determination out here that there's no real sellers? We'll just use the most simple one of all, and that is we'll just take a look at the SPY as an example. And look, I am short the indices, but we are short the indices. We're long a bunch of things as well. But subscribers know the last 2 days I have been saying, man, my confidence level in being short the indices isn't there. Why? Look, here's what I know. Well, I don't know it. Here's what the data shows me. That if the January 6th high in the Dow gets taken out, and that is not the high, the market moves higher for the next 3 weeks as we speak right now. Could be long, 3 to 4 weeks. Yeah, 4 weeks basically. 4 weeks minus a couple of days out there. So if we take a look at today as an example, you've got 45 million shares to the downside inside of the SPY. 45 million. That, in essence, when it made a swing point low out here on December 30th no less, right? Holiday trading, 108 million shares down there. 45 million shares right now equates to approximately 78 million shares. So when we say there's no sellers, we don't just mean there's no sellers. We mean there's no sellers out here in the marketplace. Now, what did price do this morning? Got down to the TAS weekly profile point of control area, place where buyers and sellers are comfortable with regard to price out here. If I look at hey, let's go look at the Qs, right? We really believe that the Qs, I said the NQ, was driving the market out here. Today, the volume on a push lower, 13 million shares as we speak right now. That is the equivalent of approximately 23 million shares. And there's no volume here to the downside. I mean, when this thing was moving higher just on January 6th, 24 million shares out here. It made a high with 20 million shares just yesterday. There are the New York Stock Exchange is telling us there just simply is gobs of liquidity. It doesn't mean that a top is not forming, and tops can form a lot slower than bottoms do. Often they do. You don't do an upside down trampoline, right? You do a normal trampoline effect out there. That's why bottoms usually take off much quicker. And the tops, you're just like Humpty Dumpty, got pushed off of the wall or something along those lines out there. So my view is still, until the Dow fails, that the underlying trend is really still the downside. We just may not get a huge move to the downside is all. And really in the next 2 weeks, we could trade sideways, slightly lower, or what have you. And boy, then that would then confirm the end of month signal that there's going to be just a big, huge push higher inside of the markets out here. That's what the indices are telling us, and even as of 1:35 p.m. So I still believe being on the short side is sort of the right side of the trade. I am not very comfortable with the fact that the NQ is trading above 50.1475. I want to see that level fail today. And it may. We're up against this 30-minute trend line out here. But if it is able to close above that 50.1475, I continue to get a little bit more uncomfortable with regard to what the market is communicating to us, basically, at that stage of the game, is that there is gobs of liquidity. Hey, the VIX index is telling us there's gobs of liquidity. Right, continuing to trade below its 50-day exponential moving average. That's a red line, 1288. And right now, if it closes below, the VIX index that is, closes below 1159, and we're trading right now at 1165. We're only talking 6 pennies out there. But if you close below 1159 today, 75% chance of odds that this Thursday turns into turnaround Thursday, and that the S&P 500 actually closes positive on the day. Those are just simply the statistics that each of us need to know. So below the 50-day exponential moving average, again, gobs of liquidity. New York Stock Exchange telling us gobs of liquidity. SPYs, Qs, diamonds, all pushing lower with light volume out here. So that is that. I don't know that we really need to take a look. I don't see any other requests here. I would prefer to have some requests out there. Then I can navigate the show and head the way that you want to look out here. But so maybe in the den, just throw something out there, something you want to take a look at. That would be good. We looked at currencies to a certain extent. We've looked at we didn't look at gold out here. Let's go take a look at Goldie Hawn. There you go, Duffy. Duffy said go look at gold. I feel like when we take a look at the Japanese yen, we're basically looking at gold, right? Now, in the case of gold, it's running into resistance. So we should anticipate that regardless of the yen, can't really say regardless of the yen, but I just said regardless of the yen, the yen is running into resistance, right? The top of its TAS or the bottom of its TAS weekly profile. No, daily profile, the top of its daily profile out there. Gold is running the top of its weekly profile. Hey, look, both of these closing above their levels. We've already talked about the yen. In the case of gold, it's 12.11. The actual inter-session high today has been 12.07. That's really close out there. Maybe it's time for a break and for gold to move sideways or even pull back a little bit. But is the move over? I don't think so out here. I just do not think that the move is over. And that really fits right with regard to what the U.S. dollar index is doing a little bit longer term here, which is moving lower over time. That is how big traders are positioning themselves. And that is my take right now until we start to see other patterns fail out there. So hopefully looking at gold there, that helps you out a little bit, Duff Meister. Got a request here from AH to look at Nike as a short, so we'll do that. Just got back here. Did I look at crude? I did not, for Mr. Bill, so we'll take a look at that. Danny says there are 3 drive patterns in the yen. Danny, let me know what time frame it is you're looking at. Take a look at that. Yeah.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we've had a number of requests here. I think I'm going to go in reverse order just with regard to what's on my screen or what I was just trying to do here, which was, could we take a look at the yen on a 240-minute, 4-hour basis? And the question is that a 3 drive to a top pattern? Now, this is extraordinary. It's a great pattern out here. It's not something that you want to force. You want this to just simply play out the way that you can. In this case here, who asked that question? Danny in Atlanta. The first drive, meaning to move higher, took place at about 6 p.m. on December 29th. Then what you're looking for is some type of Fibonacci expansion between that high and the low that it puts in, which was about 10 o'clock in the morning on January 3rd. So let's first go measure our expansions, our Fibonacci expansions out here of those two swing points. Ideally, you like to see 1.27 or 1.618. It doesn't matter which, but you like to see one or the other. What do we have here at the high at 6 in the evening on January 5th? Well, what we have is a 1.272 expansion. So it works out there. So there is absolutely drive number 2. Let's go take a look at the difference or the Fibonacci expansion at this stage of the game between drive number 2 and its low that came in at about $2,200 on January 8th. So let's go measure that expansion. Again, we're looking for 1.272 or 1.618. We're above the 1.272 level. Looks like it got up towards 1.618. So now all we really need to do is measure time out here. Now, if you use the Ensign software, you can just simply draw this pattern in like that, and it is a beautiful thing out here. Now, let's go take a look at the time spread, because each of you have this tool, or typically have this tool on our screen. I'm going to start from drive number 1, in essence at 12:29, 6 p.m. I'm going to go to drive number 2, which was 24 bars. And what we can see is at bar number 24, right here at 6 p.m. Now I'm going to go ahead and turn off those colors out there. That, in essence, so 6 p.m. at, come on, edit the chart. I don't want to do that. Edit the chart. Work with me. Edit the chart. So again, it's right here where we're looking at 6 p.m. January 11th. I'm going to turn that time cycle off, and I'm going to try to, and that's 6 p.m. right here, which, you know, let's say that technically speaking, this is what I would say, Danny, is yes, it qualifies as a 3 drive to a top pattern. However, what really needs to occur in order for one of those patterns to give you some type of, hey, this is a real pattern, just like this is an indicator. I take a look at this as an indicator. Just like Tom DeMarco has a sequential setup, counts out there. What is it that's going to give you the signal that this is actually let's call it a topping pattern out here? Well, hey, we know on the daily basis, there's a significant level of resistance that it's hitting. So that would make sense that it struggles a bit. What would need to take place inside of this chart here is some type of bearish reversal signal. Do we have it? The answer is no. What else would you like to see? You'd like to see price close below the oscillator unchanged line. So let's go take a look at that. Let's go try to figure that out as we take a look at yen futures. So I'm going to answer your question. The answer is yes. This qualifies as a 3 drive to a top pattern, but we don't know if prices stop moving higher out here. That's why we want to go take a look at the other items, right? Is there a bearish reversal signal? No, there's not. Absolutely, positively not. Not as of yet. Not as of 1:45 in the afternoon. Where's the oscillator unchanged line? It's at 0.8729. We're trading above that. So the price oscillator on the bottom, the oscillator unchanged line, tells us that the price oscillator is rising. It's above zero. There is basically nothing more bullish than a rising price oscillator above zero. So what this hasn't given us, Danny, is a clue as to whether or not this pattern is going to work, which should really be what it is that we're trying to evaluate here. Is this pattern going to work? And you'd like to see the cavalry show up, in this case here, the bears, to give us that signal. And we'd like a confirmation of that and see that price oscillator turn down. So I hope that that answers your question, because what I will share with you is that as I became, when I started my in-depth analysis of technical tools and trading out there, and let's just talk about the lightning bolt pattern as one of those patterns, right? And we know how well that works. Hey, look, we can see the lightning bolt pattern right here with regard to Japanese yen futures. And when I first started trading these patterns, man, it got to the 1-to-1, and that was it. I was in. This actually went to a 1-to-1 A to B equals CD out here. So you can see it's got another pattern, 3 drive. It's completed an A to B equals CD to the top. I would just take those trades. And gosh darn, when they didn't work, and I recognize it's just a game of probabilities, you were sitting there saying, well, first you had to feel the pain. There is no pain, there is no gain. That's like this morning when I did a 1.25-mile row in just over 6 minutes. There was a lot of pain there. But if we get back to this, why did the pattern not work? By the way, there's a new TAS market profile out here. So if the yen on a 240-minute basis gets above 0.8808, this thing is headed higher. And no, there's no 3 drive to a top pattern that would be in play out here. And so what I found was that about 60% of the time, these patterns completed at the 1-to-1 level. Well, thank you. But now how are we going to know whether it completes as one of the 60%ers or it's a 40% when it's going to keep on moving higher out here? And the way that you know, or the best way that I know, is to use these other tools, such as candlestick patterns out there, such as the oscillator unchanged line, to go ahead and give you that type of confirmation. And when you do that, it's like there's another tool that you can use. This will save you literally billions, millions, thousands or hundreds of dollars, depending on the type of trading capital that you go ahead and work with here. When you use a pattern, such as a 3 drive to a top, an A to B equals CD, and it completes on that time frame, wait for at least one more bar. One more bar. When it completes at your price level, wait for the next bar to complete to at least give you that confirmation that, in fact, maybe your pattern, in fact, is a reversing pattern. So it's great to have these leading indicator tools as we do out here. And if this is going to be one of those other 40%ers, which we don't know if it is or not at this stage, in fact, the evidence right now to support it is it is. And then price will head up into the 1-to-1.272 level. And if it doesn't fail around there at 88.57, then it moves up to the very next level, which is around 89.44. So we just, at this stage here, the information is that, and why has this started to move sideways-ish? Because we know on a daily basis that it's up against resistance. So I don't know if that was too much information. It probably was. But I would feel disingenuous if I gave you less information. That's just simply not in the cards, not the cards that you and I are playing. Now, Mr. Bill had asked if we would take a look at light sweet crude. So let's go take a look at it, see what light sweet crude is doing. And we take a look at the current contract up 84 cents, about 1.5%. Now, as we take a look at this, what we know is that this is a very bullish pattern with regard to light sweet crude. Why does Steve-O even say something like that? Well, I say something like that because of the nice little rising price channel that has formed. So we want to pay attention to that as one of our tools out here. Another tool that we want to pay attention to is the top of its TAS daily profile, which is priced at 54.46. Price is above the center of its daily box. That's at 53.13. It's sort of gotten up to 54.46 when it reached the high today of 54.29. I don't know if that's the end of the move. I would say, Mr. Bill, pretty decent odds favor that light sweet crude wants to go hit the top of that box again. Maybe it's like $55-ish or so. Maybe that finds resistance, but my goodness. If it closes above it, then it's on to level number 2. So light sweet crude, if you're looking for the bearish outcome, we're not there just yet. Steve Rhodes, we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So one of the other requests that came in was from AH in the Tiger's Den, and the question was Nike as a short. I just don't have enough information as to what your time frame, what you're looking at. Are you already short? You're looking for the spot to get in. So if you could type it in the den, that'd be great. If not, I'm just simply going to do my spiel out here and see what we can figure out. Now, Nike's been one of the poorest performers, right, inside of the Dow, making a nice high back in December 2015 out here. So if I don't know what the weighting of Nike is inside of the Dow right now? Well, we could go figure that out, but we're not going to. The question is, what was this thing doing at the lows? So interestingly enough, let me do this and turn a couple of things off. If we go back to, and I'll give you a clue for us that we're going to go take a look at, right? A clue that we're going to look at. This is a daily chart out here. And what were we looking at inside of the yen, the 240-minute yen, right? We were looking at a 3-drive to a top pattern. Now, let's just go take a look at it. It looks to me, that's the first thing I visually see when I take a look at this daily chart. Well, I see a couple things. I see a big, huge move, a swing point down here on the trading day of August 24, 2015, right? Which was a bottom inside the market, 19 million shares. Last time that Nike was down in this area was on light half the volume, 10 million shares out there. If we just go use our tool that measures time between a set of swing points, remember, we don't want to force this or anything. Here's your 3-drive to a bottom pattern. 197 bars really, in essence, should have taken place on November 11th. Looks like that 3rd drive took place on November 2nd. You got to give it just a tad of room out here. And these, like in the 240-minute chart for the yen, can be significant reversal areas. So Nike, in essence, whoops, how did I do that? Man, I know how I did it. Why did I do that? Let's turn that up. Okay. So let me go ahead and turn up the cycle pattern, the daily chart for Nike. Let's come back here. And since then, we have, in essence, seen a nice little rising price channel out here that has formed. Now, let's take a look at the good, the bad, and the ugly out here. The bad and the ugly are the mere fact that right now today, price is trading below its oscillator and change line, 52.54. And I believe also below a TAS daily profile. That's as in the case of Nike. There may be more retracement that is going on, but if we just simply use this little trend line, let's just extend it out here. Let's see. Oh, use a green arrow. Come back here a ways. Let me use a green arrow for you. So you can see a nice little trend line out here that has formed. I sort of grabbed the right swing points. And I would say, that no, I wouldn't short this vehicle at this stage, because right now this is actually giving us signals of a bottom, maybe a longer-term bottom out here. Now, this may pull back to the price level in the 51-ish type area. Let's turn on those TAS profiles again, see what they say. Yeah, so they're really matching up. 51.48 happens to be the bottom of the TAS daily box, happens to also the weekly box, TAS weekly box. So that should be pretty strong support. We know as we take a look at that weekly box, let me turn off price here. Those are the green levels. Let me turn off the green arrow out there. Let me turn off that little trend line tool. Go ahead, turn off. What the heck happened? There we go. Now it should. There we go. I don't know what happened there. But you can see the green horizontal lines. That's what I want you to pay attention to. Really set up. That says that this is biased to the upside out here. And so price may pull back to 51.48, but that's your buy point. So Nike is a short. I think you should be looking at Nike as a buy. Folks, have a terrific Thursday. We'll see you on fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.